2, 1.
Welcome to Made for More Living.
One small step for man.
With Johnny Jennings.
Kick the tires and light the fires, Big Daddy.
The fastest and most exciting hour of news, events, and real estate in Northern California.
And this is a fact that was proved.
Online at madeformorerealty.com.
Does everybody know what time it is?
Get ready. Here we go.
So on the show today, we have a wonderful guest, dear friend, lender extraordinaire, and a future Ironman.
Snappy dresser.
Half Ironman, yeah. Snappy dresser.
Father of two.
Mr. JJ Mack.
Hello. Thanks for having me, Johnny.
Welcome. Yeah, thank you so much for
Do you
being
guys
back on
find
the
it
show.
interesting because you're good friends that you both have the same JJ initials? Because you could actually be called, because you're Johnny Jennings.
Yeah.
So it's JJ and JJ.
Yeah. In fact, that was one of the nicknames. So it was either going to be Jack or JJ for our oldest, because his name's John. And
what does JJ represent for you?
My name is Jonathan, so people used to call me John, actually.
Oh, there you go.
Yeah.
See? Oh, come on. It was meant to be.
And so anyways, we were going JJ or Jack. And I think everybody just kind of leaned towards Jack. And so, yeah. So
There you
JJ
go.
gets to keep his, he's the only JJ in the group.
There we go.
So, but today we have a lot of stuff to cover. We're going to be talking about lending. That's the hot topic right now with the Fed and Donald Trump and interest rates and what the difference is between what companies like yours offer versus those big banks. Because quite frankly, I am sick and tired of hearing about, well, I bank at Wells Fargo. I bank at Chase. I'm like, oh my gosh, you're making me want to run out of a freaking 12-story building and just jump out the window. Because people just don't understand how that hurts them. So when we talk about that, when we're talking about how buyers are making Valerie cry. Valerie literally cried this Sunday. First thing,
Wow.
great way to start the day.
Can we start off there?
We start there. We're going to be talking about advertising and how we're going to be, how you can help, how a good agent should be getting their name out there, because the more people that know that they exist, the better deals you can get. Yep. And maybe, if we have time, we might be touching on should interest rates drop. There's a little bit of a difference between the Mac attack and myself on that. So where did you want to start, Matt?
Well, what piqued my interest is your wife. Did you say a client made her cry, or who made her cry? Well, tell us the story. What happened over the weekend?
So what happened was the top agent on our team right now, Miss Haley Bolger. She's incredible. In fact, she's doing so well, she decided to take, I think, a 2-week vacation to Europe. And she has like 5 escrows going. Good for her, right? Good for her. She's got 5 escrows going. And so Valerie's helping her out while she's gone with these escrows. Well, one of the buyers so Haley's representing the seller. One of the buyers made an offer. They were in an escrow, and the buyer got cold feet. JJ knew a little bit about the situation, so we were talking about it, and the buyer just pulled out. And so when Valerie received the news, it is now her job to go and tell the seller that the buyer no longer wants their house. Mm-hmm. So you can imagine how emotional that is when, it's almost like
that happens.
It does,
right?
But you have all
it's not uncommon.
It's not uncommon, but you have like all these plans depending on the situation. How long was the house on the market? Was this the only buyer? When is my house going to sell? What's it going to sell for? Why don't people like my house? I loved it. I've been living here. There's nothing wrong with it.
And it had already been in escrow?
And it was in escrow.
Oh, okay.
For a while, too. It wasn't just like yesterday. It was
So like
for a few weeks.
And it wasn't like the financing didn't come through or anything like that, right?
Nope, because JJ was the loan officer on that one. So we knew that this person could qualify for this house. But for one reason or another, they decided to exercise one of their contingencies and back out of the deal. And so Valerie had to call this woman, and it's Sunday morning. My dad's visiting, the kids are doing their thing. We're trying to have a fun family day, and it starts off 8:30 in the morning. Valerie has to pick up the phone and call the seller, and that seller cried 3 different times during that phone call.
Is this an older person?
I honestly don't know anything about them.
Oh, okay.
I just saw Valerie walk into the room, and she's like, "Hey, I got to do this." She walks back out, and she's just devastated. Didn't impact her at all. It wasn't even her deal.
Right.
But just the emotional toll
Okay.
of experiencing what that woman was going through it's really horrible. So when a buyer makes an offer on a house, like make sure that you're really right, JJ.
Sure.
Make sure you're ready to commit to that house. This isn't like, oh, let's just dip my toe in the water. This impacted the buyer's agent's family, JJ's family, Haley's family, my family, the seller's family. Like this has impacted multiple people because that person, for one reason or another, said, hey, you know what? This might not be the best house for me.
Right.
I get making the best decision for yourself, right? And if something comes up, like I'm not saying you shouldn't exercise your contingencies, but if you just get if you're not ready to see the process through, don't waste people's time. That is just unprofessional.
But it seems like they went into escrow, they arranged for financing, right? You thought they were committed, right, JJ?
Yes, very much so.
So sometimes that just happens. I think kudos to Valerie for making that connection and having that empathy, right? That's what you want from someone you're working with. You want them to be able to understand your situation. Yeah. And absolutely, it can be very emotional. This is a huge, like you just said, this is a huge deal. But also you can be encouraged that it's not the end of the story, right?
It's not. But I'm just seeing this with more frequency right now.
Oh, really?
Yeah. I think buyers are a little nervous. They're nervous about what's happening in the market, and I get that. But before and it cost them money. Like they hadn't. I think they'd paid for inspections and stuff.
Oh, really?
And appraisal. Like there was money in this, and so if you're considering making a move, make sure you understand why you're making the move. Make sure you understand what's involved with the move. Make sure you understand and everything that's involved before you start down this journey, because it's not a good look. And then it makes it harder for your agent to get you a good deal in the next home if you have that reputation.
But also, I think the biggest thing I get out of this whole thing is just it's evident of the type of person that Valerie is and your whole team, how much you care, because that's what people want in the people they work with. They want something like that. Yep. Hey, Valerie showed that she cared about this, even though it wasn't her deal. She cared about this just as much as that homeowner did, and I think that to me is a big win to show that, hey, our heart is in this, and this is the type of people you work with, people who care.
Yep, people
that's
who
important.
Care. And that's why, honestly, that's one of the reasons why we use JJ Mack with American Pacific Mortgage, is because he's a local lender. Like I can't overemphasize the value in that. He's not just a random person at Chase Bank. He's not just a random person at Wells Fargo. He's not somebody across the country working for Rocket Mortgage, right? Yeah. And so another quick story, like along the lender side, was somebody was pre-approved with a bank, rhymes with Chase, and turns out they were not pre-approved. They went into escrow. They were not pre-approved. The lender did not do their job. The income was not verified correctly. And so a couple days into this, it's like, oh, wait, you can't actually afford to buy this house. It's like, well, you should have gone with somebody who knows what they're doing. That's why we recommend JJ Mack. And that's not unique to the banks. They're just not as good. What have you seen on the bank side, JJ? Because you deal with this more than I do.
Yeah, I mean, when you talk about a bank, you're talking about somebody, a loan officer, I'll say that with a grain of salt. Yeah, because there's not really are they really loan officers? When you work for a bank like that, you do not need to go and get licensed.
Really?
You're not taking a test, no. The bank holds a different kind of license. The federal regulations are different. They do not need to go through and take the test and do the things like I did when I went and got my NMLS license and had to be a loan officer. So is that person actually qualified to go do a mortgage? I would say no, they're not. And so for me, it's all about making sure the client is happy with the process. Because if they're not, all of a sudden that means they're not going to come back to me in the future. They're not going to send me their client, their friends, their family, their clients they work with every day, whatever. So for me and you, it's on our best interest to make sure they get the very best service, the best deal, everything going forward.
Agreed.
So does it come down to that, the best deal? Are most people going with those larger banks because they think they're going to get the best interest rate?
Yeah, I think so. I think a lot of people think that, and they also think the ease of going to my bank. And that's the biggest thing. It's like, I'm just going to go to my bank. They already have my info. They already have my bank accounts. I don't need to worry about it. But in reality, you and I both know, Johnny,
Yeah.
this client you're talking about, it took them over a week and a half to get pre-approved, and they weren't even really pre-approved.
Mm-hmm.
In reality, that person comes to us. We have them pre-approved in usually less than 24 hours because we know what we're doing, we know what we need to ask for, and as long as the client is committed, we're committed to them and moving forward quickly.
Yep, I would say, yeah, money's a factor in this, but people are more motivated by pain, and that pain of like submitting your application to like a Wells Fargo or a Chase, it is just brutal. And then you have to wait forever, and then you're not sure what's going on, and then they want one more thing. Whereas like with JJ, it's done in one day. I mean, it can take longer, right? We're not pressuring you. We're not a pressure. JJ's not a pressure salesperson.
No.
Right? But if you want to move fast, if you want to make it easy, it's absolutely painless. And most people don't realize that.
And at the end of the day, they're not getting a better deal, actually.
It's the painful thing.
There's a reason why the Chase banks and the Bank of Americas have a lot of money. Well, they charge a lot of money usually to do things. And so when you're talking about getting pre-approved with a big bank, they usually do have higher interest rates. They usually do have higher costs. And so a lot of people think they don't. They usually do.
They do. And they're I'm just frustrated right now. And so if you feel any anger or any
yeah.
any animosity, coming across the from me, it's because people just don't understand that, like how it's day and night, the difference between JJ Mack and a traditional lender. Like another example would be like how many times has somebody not been able to get pre-approved, JJ, with a different lender, and then they come to you and you're like, oh well, let's do this.
Yeah, it happens often. Every single week we have a few people that come to us and, well, I really wanted to buy this $700,000 house and I didn't get pre-approved. My real estate agent said I should try a different lender. So here I am. Oh, well, you are pre-approved. They didn't use this income, or they didn't realize that you could do this non-QM type loan. Or
What's QM mean?
Qualified mortgage.
So for those people who are listening, what's non-QM versus QM?
So non-QM loan would be something more along like what traditional financing would be like a conventional loan. A non-qualified mortgage would be where you have not Fannie Mae, not Freddie Mac, but a different investor coming in and insuring that loan. Somebody that you're going to have a slightly less higher standards than the Fannie Mae and Freddie Macs of the world.
So what's an example of somebody who came in, couldn't get like a Fannie or Freddie loan, and then they went with you? Do you have any stories you can share around that?
Yeah, absolutely. So we have one right now that just got qualified with us. They are a commission-paid employee. They've only been getting commission for 1 year. Fannie Mae, Freddie Mac usually says they want 2 years of commission.
Yep.
This loan officer, and again, I'll air quote that loan officer, said, oh, sorry, I can't qualify you. You're going to have to wait another year. Man, what a mistake that was. We got their income. We look at their commission for the last year. It's been very consistent. It's actually been trending upwards. We're able to get them into a home today. Can you imagine waiting a year to 4 or 5% equity growth that they could have been receiving over this next 12 months?
Yep.
And then realizing, what, I could have been qualified this whole time?
Yeah.
And then all that rent they would have been paying out for nothing? Crazy amount. And so I think this is a benefit to them, and it's really going to help their growth and be able to go buy their next home and several other things in the future.
Yeah, it just kickstarts it. You don't have to wait a year. But that happens all the time.
All the time.
JJ's the fixer. If we have a deal falling apart, we're like, and he's not doing the loan, we're always like, hey, JJ, I know I'm representing the seller, but maybe we can get you in here. Can you fix this, please?
That's my favorite thing, actually. It's like with we used to actually brand it CPR.
CPR, loan CPR?
Yeah, we'd be rescuing these deals. So
there you go. Dr. Mack.
That's it.
All right, well, when we come back, we're going to be talking about a special program that enables people to buy their next home before they sell their current home.
Realtors who care. I know it's a cheesy phrase, but it's true. You want to work with someone who cares about you, the needs of your family, and who's going to get you the most money for your home in the shortest amount of time. That's who you get with Johnny Jennings and his entire team at Made for More Realty. And listen to this. you can get at least 3 cash offers on your home in as-is condition. You don't have to do repairs or staging or open houses. Just at least 3 cash offers on your home in as-is condition. It's simple, it's easy, it's not complicated. What do you got to lose? If you're curious what kind of offers you would get on your home, just reach out to Johnny Jennings with Made for More Realty. Hey, there's a reason why they have over 1,000 5-star Google reviews. Don't take our word for it. Go check them out for yourself. Johnny Jennings, Made for More Realty, where you get more for your home.
This is Made for More Living with Johnny Jennings. Online at madeformorerealty.com.
So we are back with JJ Mack with American Pacific Mortgage, and we are going to be talking about a special buy before you sell program. But before we get into that,
we're curious because you're a busy guy. You're a father of 2, and we heard you have an announcement, though. Are we allowed to share that yet?
Sure. By the time it gets out, I'm sure it'll all be widespread.
You are going to be a father once again.
I will be,
with the same woman, though, right?
yes. Yep.
That's cool.
I'm a committed man.
So, father of 3, you're busy, you have your own business. What time do you get up in the morning?
Whew.
that's a good question.
Between 4:30 to 5.
Wow. Mm-hmm. And what time do you go to bed?
Well, he's a farmer. That's late.
Oh, is that what it is? You're a farmer?
He's asleep.
With
he
your
sleeps in
almond
at
field?
5 o'clock.
Yeah, I mean, literally, when I was farming full speed, I wasn't, on the summers when you're out there about to harvest, you're out there every single night till 2 or 3 in the morning.
Wow.
And then I still had my mortgage business, so then you drive home, sleep for 2 hours, wake up, grab a shower, go to work.
Wow. You have a special DNA to be able to do something like
Absolutely.
That was a rough time in life, but yeah.
Yep.
So you're up at 4:30 in the morning. What time do you go to bed?
I usually like to be in bed by 8, 9 o'clock would be late.
Oh, okay.
Oh, that
Wow.
early.
Yeah, I put my girls to bed, and then I'm getting in bed.
Okay.
Good for you.
Yeah, I enjoy it.
Man, that is
Way
just
more
crazy.
regimented than I am.
Okay, so what's your morning routine? Do you have like a Mark Wahlberg routine? You hear the Mark Wahlberg schedule?
I've seen
where he
this.
has like 3 workworkouts every morning. He has like 3 different breakfasts. And
Yep.
It's
No.
crazy. Have you heard
Personal
about his
chef.
routine?
I don't have any Mark Wahlberg. That seems pretty intense.
Oh, it is.
I like to, so, Johnny and I, we've been training for a half Ironman.
Got something to prove. Sure.
And so
You should do the full, man.
Johnny's preparing for a full. I'm giving up only half.
Yeah, you could do the full though, but I think
You guys should do
you're
the
going to be
Disney
regretting.
marathon at Disneyland.
I'm not
Why
a
don't you do
Disney.
that?
I'm not a Disney guy. I'm not a Disney guy.
But yeah, I mean, the thing is to be able to do this, you have to commit yourself. There's a certain amount of commitment that you have to put into it.
Yeah.
And so this year was my year of health. I felt I'm going to go all in on this thing. And so I stopped drinking.
Yep.
I decided that I was going to eat healthy. So very low sugar intake, unless they were from fruits and whatnot. So here's the deal. Wake up, get a really good workout in, no matter if it's biking or running or swimming. And then before I go to work, I'm getting a pretty decent shake in.
But what about your grounding? Don't you do some grounding, have some coffee? Like there's more to it than just working out.
Well, yeah, I mean, so
you're working out before you put any type of food or...
So wake up 4:30ish, 4:45, 5, depending on the day, what I'm doing. My coffee will already be made. I have a really cool coffee maker. It's already made. By the time I wake
you're
up, it's done.
Drinking that coffee first thing in the morning, working out.
Grab that with a little, they make these little waffle things that I like to eat.
Okay, hold on a minute. So you're having coffee and waffles.
It's called a honey stinger. If you ever heard of them.
Is it already prepackaged, pre-made?
Prepackaged.
Does it have a lot of preservatives and sugar in it?
It's got a decent amount of carbohydrates.
Okay.
So when you're eating this, you need carbs.
Sure.
Dude,
for your work.
this like saved me one time, these honey stingers.
Dude, they're really good.
Honey stingers is what they're called?
Yeah, honey stingers. So I was running from Folsom Lake down to the Sacramento River, zero training. And
Sounds like a good plan.
And I didn't have my phone on me, and because I didn't want to run with my phone, and so I left it with Valerie and my dad, and so they were supposed to meet me every few miles and give me water. Well, they lost me. They couldn't find me, and so I ended up going nearly 20 miles without water.
Oh, jeez.
What?
Yeah, in the middle of it's September and it was super hot. It was not the best thing.
Wow.
But during this 20-mile stretch, I will never forget this little Filipino woman was running the other way down the running path, And she's like, "Are you okay?" I'm like, "I don't think so." And she pulled out what I now know to be a honey stinger. And she gave me one of these honey stingers. And she's like, "You need to call somebody." Yeah. So I called Valerie, and I'm like, "Hey, this is where I'm at." And then the lady takes the phone out of my hand, and she starts verbally berating Valerie about
What?
Why do you let your husband do this? You should know better. He shouldn't be out here
Is she
by
an older
himself.
lady?
Yeah.
Yeah, she wants to play mommy.
And so, she's totally playing mom. and so I literally say, "Okay, this is my cue." I start limping away and running back down the road while she's yelling at Val. But anyways, long story short, honey stingers.
Another example.
I did not know what they were.
When your wife cried.
No.
Wow.
And you think you're up to doing an Ironman. Give me a break.
We'll see.
He's going to have the nutrition this time.
We'll see.
He's going to have a lot of those honey stingers in his pocket.
So you have coffee, honey stinger, workout.
Honey stinger, coffee. There's a little bit of beet juice in there.
Oh my word! And where?
So I take a little shot of beet juice,
dude,
for the nitrates to go through it opens up your blood vessels a little bit more, helps out. So anyways, I do all this stuff, work out, and while I'm working out, I'm taking a lot of I'm bringing out more carbohydrates. So there's certain mixtures that you can put in your drinks to help with that, BCAAs and whatnot. And so doing that, and then when you're done, then I come inside. Then I will make my concoction, which is a shake.
Do you put any
epic
protein
smoothie.
in it? Any eggs or anything?
My shake?
Yeah.
I do protein powder.
Oh, you do protein powder. That's right. Okay.
Yeah. So,
But just real quick, what's in this epic shake?
so
You're gonna live to be 1,000 if you drink the shake every day.
yeah, man. So almond milk, almond butter. I put banana, mixed berries, spinach, turmeric, black pepper.
What does the black pepper do for you?
Inflammation. Really good
Oh,
for inflammation.
wow. I didn't know that.
Yeah. Apple cider vinegar, protein powder, very high quality protein powder, creatine. I'm probably forgetting a few other things.
Wow, dude,
Yeah.
that's crazy. My morning routine is get up, brush my teeth, go for a run.
What do you eat?
You not healthy. I am not a.
He's going down to Krispy
Yeah.
Kreme getting a dozen chocolate
So
bars.
so lately Valerie makes some eggs, and so I just eat some eggs out of the pan and
That's
move
good.
on.
That's good. Eggs
But-
and bacon. That's what my kids eat every morning. Eggs and bacon.
Eggs and bacon, love it.
Yeah.
But
What's wrong with that?
Turkey bacon.
but I don't.
High protein.
Even better.
Yeah.
I don't. Yeah. So I jokingly told my chiropractor, he's like, "Johnny, you're dialing in your diet, because he's helping me with the Ironman." And I'm like, "Does tequila and power bars count?"
Wow.
And he's like, "No, that does not count." Another buddy's like, "Johnny, you're drinking, a gallon of water a day or whatever." I'm like, "Dude, I have like a cup of water a day." So I am not. I need to dial in the diet a little.
Well, it's interesting because we have talked about this, and I was saying, hey, maybe try the creatine, try the protein powder, but you're not into it.
No.
You don't want to do all the packaged stuff. You want to stick with
It scares me.
whole food.
Well, because I was told if you start doing creatine, you got to be drinking at least a gallon of water, and that just makes me. I'm not going to do that. I know I'm not going to drink a gallon of water.
I don't think you have to drink
You
a
got to
gallon of
stick
water,
to
but-
1 cup of coffee. You got to cut back to 1 cup of coffee in the morning. And then, well, here's the thing. Sometimes you think it's the caffeine, but it might just be the behavior.
No, I love coffee. It
Sipping
doesn't-
on something warm that is what you need.
It doesn't wake me up. Like caffeine doesn't really impact me a whole lot. Yeah. That's why, this is my first cup.
Wow.
Yeah, and it's
And then the rest of
10
the day-
o'clock, 11 o'clock.
Okay.
Put some apple cider vinegar and some warm water and sip on that the rest of the day.
Yeah, it's not my thing. But anyways, and then do you do any grounding?
So I used to do cold plunging and grounding every single day. Until recently, I found out that it's actually not good to cold plunge right after you work out. And I just don't have the capacity.
Why?
Because when you're cold plunging, what happens is all the blood rushes to your central part of your body
Yes.
to keep you healthy.
Right. But that's not good for your muscles.
You want the blood flow to your
Yeah,
muscles right
yeah,
after you're done
that makes
working
sense,
out. And
yeah.
so you're cutting off the circulation to the muscles that need it. So you got to wait 7 or 8 hours afterwards.
Good
What I'm
point,
hearing is
yeah.
you need to buy a sauna. Is what I'm hearing.
Sauna would be good. Yeah.
Yeah.
So I just need to close a few more loans and I can buy a sauna.
Come on,
So
guys.
speaking of loans, you're saying there's some type of loan where you can purchase a house before you've sold your current one?
There is. Buy before you sell.
So what's the difference? So there's other companies that offer this, but it's not the same. So let's can you please highlight the difference between what other people may do, like say like a home light, versus what it is that you provide?
Yeah. So home lights, for the right person, it can still be good.
No, it's not. Go with JJ Mack.
Yeah. I mean, it's not necessarily
JJ's just
the
being
best.
nice. It's expensive.
It is very expensive. Yeah, I would not. If you're doing a buy before you sell program, I would not recommend it whatsoever. I think there's a lot of other options out there, and the best option that we have does not cost any more than your standard financing, and the interest rate is very, very close to standard financing as well. This is, like we were talking about earlier, what we call a non-QM loan, a non-qualified mortgage loan. But it doesn't have any of the negative effects like you'd see if you were going to go do a bank statement loan, which in fact you can actually utilize this as part of the buy before you sell program. So let me tell you a story, and it will help explain it. Is that all right?
Yeah, absolutely.
So a gal went and got pre-approved with her lender, which again rhymed with Chase, right?
Yeah. Poor Chase.
Yeah, I know. So no, not poor Chase. They're very well off.
They've done it to themselves. Yeah, go ahead.
So they got pre-approved there. They put their house up for sale. They were very excited. They went and got into escrow on this new home, and it was contingent on the sale of their current house.
Yeah.
Their contingency came to the point where they're like, okay, we have to either buy this house or the seller's going to say, sorry, we're going to move on.
Yep.
Well, they came to that point, and the seller told them to move on. Unfortunately, they had to get out of escrow. That house went to somebody else, and they said, you know what, we're going to go find another home. So they went and found another house. Same thing was going to happen. This real estate agent said, don't let this happen again. Go talk to my lender. We looked at it. We found a way to do it non-contingently. That means that they could buy their new home without selling their current home first. Usually that doesn't work because some people have a hard time qualifying for both your current house and the new home.
Mm-hmm.
But there are certain lenders through these non-qualified mortgages that will allow you to only qualify for the new mortgage and not look at that current mortgage as a debt because they know you're going to sell it.
And this is something special to you, right? There's nobody else out here is offering this program.
I don't know any other lender that has this specific one that's this lenient.
Mm-hmm.
The debt to income ratio is the same as regular conventional guidelines. The credit scores go, all the way down to a 620 credit score.
They're not looking at your existing mortgage.
Mm-mm.
Yeah.
And so the cool thing about this one actually is this was a self-employed borrower, and we had to use their bank statements because their tax returns didn't give them enough income to qualify.
Okay.
So we were able to blend in a bank statement kind of loan. And then the coolest part about this is they didn't have the money for the down payment on the new home because they hadn't sold their house yet.
Yep.
But they already had their house for sale. So most lenders will say, well, I can't give you a loan on that house. It's already for sale. What's the point of me loaning you on something that I know you're going to sell in 1 to 2 months?
Yeah, I'm not going to make any interest or anything on it.
Yeah, what's the point? Well, we found a lender that will do it with no prepayment penalties. So you can go in, we can get you a home equity line of credit on your current home as long as you have the equity.
And it's already on the market.
Already on the market.
Guys, this is huge. Like this is so rare. Normally if you're going to do this, you have to do it before you go on the market.
Correct.
But not only are you feathering in like a bank statement loan, but now you're able to get them this program while the house is currently on the market. So so you have this special investor that JJ Mack exclusively has access to, and then what happened?
So we got them the home equity line of credit quickly. Within 5 days, they had their money in their bank account.
Wow. In the account. So they had to get wired, a day or two before. That's fast.
Yep. Got the HELOC quick because this, mind you, this was a 16-day escrow.
You did all this in 16 days?
We did it in 15, actually.
There you go.
16-day escrow.
Forget 30 days.
Yeah, right. No, this was all leading up to us going to their home, giving them the keys. If you go to our Instagram page, you'll actually see the client on there. Super excited. This was a feel-good story. Made him feel like they weren't going to qualify. They felt like they were in a spot where they were going to have to wait a whole bunch of time to being one of the happiest new homeowners we could ever imagine.
That's important to highlight, though, the difference between, hey, we can't afford, to boom, not only can we afford, but we're getting the house we want and we're moving in.
Absolutely.
That's a huge gap that most lenders are not able to bridge. I mean, it's like freaking watching Da Vinci paint when you do loans.
Thank you.
Like feathering in the bank statement. You and Lindsay feathering in the bank statement thing. Like that is incredible. And so if somebody wants to reach out to you, if maybe their current lender said, hey, I can't do the loan, and they're looking for a second opinion, or maybe they already are pre-approved, but maybe they want to get a better deal, a second opinion, what's the best way for them to reach out to you?
Yeah, I mean, just Google searching JJ Mack team. We're going to pop up. You go to our website and you just put in a little inquiry on there. On the front page, you'll see, inquire today. That's usually the best and the easiest way to find us versus trying to write down our phone numbers or something. Just JJ Mack team. Go Google search us. You'll find it. It's super easy to go in there and click on an inquiry.
Yep, and you'll see all their reviews. They got tons of 5-star reviews. And if you can't find JJ Mack, if the spelling's too hard, just go to madeformorerealty.com, and we'll direct you over to JJ Mack. He's our in-house lender. When we come back, we're going to be talking about should interest rates drop. I know a lot of people want them to, but should they?
In a season of uncertainty, when things are not as predictable as they used to be, you want to work with someone who can take advantage and find those opportunities to benefit you and your family, especially if you're thinking about selling or buying a home. Johnny Jennings and his team has more tools and access to information, including homes that have not even hit the market. They're not even listed. He can get you that information. So during this season in the real estate market, where there's a lot of confusion and uncertainty, works with someone who you can have confidence in. Who cares? Who cares about you and this very important transaction in your life? So what do? Reach out to Johnny Jennings with Made for More Realty. All you got to do is Google them, Johnny Jennings with Made for More Realty, and find out how you can get at least 3 cash offers on your home in as-is condition. You want more? Get more with Johnny Jennings and Made for More Realty.
This is Made for More Living with Johnny Jennings, online at madeformorerealty.com.
So we were running this morning with a guy, JJ, and he was like, "Oh, I saw you." And I was like, "What are you talking about?" He's like, "I saw you on one of those billboards. I saw you on the billboard." I was like, "Oh man, it's starting to work."
So you think you have a pretty enough mug that you should just blast it on billboards all over town so everybody could see your beautiful face?
No, actually,
is that what it is?
I did not. I did not want to put my face on there, but a lot of people recommended it. And so I'm like, okay, you guys know what you're doing. You guys have more experience than I do in this.
Has your wife seen the billboard?
Yeah.
And your mom? Maybe not your mom.
I don't know if my mom has.
What did your wife say about it? She drives by and says, "That's my husband right there."
She loves it. Yeah, yeah. No, we jokingly called it Made for More Alley. So Valerie's mom lives in Reno, and she was driving out to the Bay. Well, we have over 20 boards up, and so she drove past probably 12 of them.
Wow.
On her way to the Bay and coming back, and so she was like, "Johnny, it was too much. It was too much. I got tired of seeing your face up there."
Wow.
I'm like,
Thanks, mother-in-law.
That's what I want to hear, mother-in-law. Suegra. It's mother-in-law in Spanish, but suegra, that's what I want to hear. But
and it's funny because it's not like
JJ talked me into doing them though.
It's all over the place. I mean, yeah, I've done them over the years, and as you're driving down the 80 freeway in the corridor there, you're going to see. I cannot not see you now.
Boom. That's the goal.
So how do you know how, what?
The benefit to the team and us is like we're getting 5 to 7 million impressions a week. That's just a week from those billboards. And to put that in context, like I have had one video that went viral. I think it's going to hit 10 million views this week. That's 10 million views globally. This is 5 to 7 million views a week locally. And
next thing you know, he's going to be all over those buses.
Something wrong.
Driving around town.
But
something wrong, call John.
There you go. Something wrong, call John. Nailed it. But the value to the clients is that it drives more people to our websites where our sellers' properties are featured. So they're getting more exposure on their homes than they would otherwise. It brings more buyers to our websites, and that helps us put deals together. We have a massive, over 100 off-market properties like this list that is growing because of this increased exposure. It's just a great thing for the company,
cool,
and the people that work there.
Agreed.
But the one thing, so JJ and I are in agreement about the billboards, but we don't necessarily agree on interest rates, right?
So Johnny, for a while, and I've gotten into this debate with him.
I think so.
There's a lot of people who think that President Trump is right. He's been pushing, in fact, calling Powell an idiot, a moron, his worst appointment he's ever made, that he needs to lower interest rates. And people like Johnny think that's a bad idea. And other people think that it's a good idea. We need it. The economy is stable and we need to lower interest rates. And you fall on that side, correct?
I think
What's
so,
your
yeah,
argument?
I do. I think that we've come far enough. There's really the inflation is where it needs to be. And if you go too far, you don't want to go past that tipping point. If you go past that tipping point, then what do you have to do?
Tipping point being like no inflation, like negative inflation?
Well, maybe not negative inflation, but at some point you're going to get to a point where there's interest rates are being held too high for too long, where people can't afford what's being out there, right?
And it's acting as a rev limiter on the economy?
Correct.
Is that what you're
And
saying?
it hurts employers. And all of a sudden you're taking those employers and you're reducing the amount of staff that they're able to hire because they can't afford it anymore. They're substituting this out to people over in Asia or whatnot to get their work done instead of here. So at some point, this all happens. And it already is starting to happen that way, where companies have made a lot of money in the past and they still have a lot of money saved up in their coffers because of 2020 and what happened there. But at some point, that's going to change. And we need to start cutting rates so that so the employers, the companies can actually start affording to take out, loans to go do more in America and to grow their businesses and to create more employment.
Historically, though, aren't rates lowered when the economy is struggling? Isn't that a lever the Fed pulls to stimulate?
So the inflation, once you get a certain point in inflation, then that's when the Fed has stated that they are going to lower rates. They needed to stabilize the economy first before they did that. They wanted the interest rates to be at, 2.5% or whatever it was, 3%. We're at 4.25% today. So we're getting to the point where we're getting very close. I don't think we're ever going to get back to that level because in order to get there, it's going to take several more years. And the companies already have enough money saved up to continue to do these things, to continue to hire, continue to have employment. But you don't want to get to that point. You can't get to unemployment being a certain amount and inflation get to a certain point without having some troubles. Why have trouble when you can just lower rates down?
So when we talk about lowering rates, like what does a rate reduction look like to you?
Well, so the Fed's meeting tomorrow. By the time you're hearing this, they probably have already met. And there's really a 0% chance that they're going to cut tomorrow. Now in September, they're potentially, I think it's a 60% chance
That's what I saw, yeah.
They're supposed to cut. And then again, December, I think there's like a 65% chance. But that's usually only going to be 0.25% cut. You're not necessarily getting these big 1% rate cuts like we had a few years ago when inflation was running rampant, right? So I think that's what they should do now that we're in a position where, hey, things are looking good. We can lower rates. We don't need to hold them artificially high.
So you think a 0.25% interest rate would help?
I think it would go the right direction.
How much do you think? So you recently quoted a statistic from Realtor.com?
Was it Redfin? Sorry.
Redfin?
Yeah.
/ Rocket Mortgage.
/ Rocket, yeah.
Yeah. What was it they found or predicted?
So they did a study that said that for every 1% in rate decrease, so if interest rates today are at 6.75%, if rates go to 5.75%, 5 million Americans are going to enter the housing market. That's a huge amount of people that are going to come in and want to buy a home.
Yeah.
That just goes to show that if you want to buy a house, why would you wait to go compete with all these people versus buying today?
My concern, though, is that if you lower the rates, the prices just go up. The home prices go up or they stay high. Like they're already incredibly high.
Right.
And so that's my concern is like you're robbing Peter to pay Paul. You're moving money around. And so there's two conversations here. One's like the housing market, the residential housing market, and one's like the business, right? The companies, which is kind of what you were speaking to. And that's my concern is that, so, I mean, they dropped rates twice last year.
Yep.
And interest rates like the federal fund rate went down, but interest rates went up. And that's my main concern is I think that the Fed, if they haven't lost control, I think they are dangerously close to losing control over that lever.
And there's also the impact of tariffs. People are concerned. You've already seen many companies announce that they're raising prices on a lot of different products. So there's that tariff impact. And so people are critical that, hey, like Johnny said, if you bring in 5 million new homeowners or potential home buyers, then obviously you're going to see home prices go up, right? Not a given.
Potentially, unless more sellers come to the market.
Yes, they feel confident that there's a handle on inflation, but they don't want to do anything to mess that up. At least not until, things stabilize a little bit
What
longer.
I'd be more curious, and I haven't explored this, I don't know if you can speak to it, JJ, but like, what would happen if the Fed just went away? Like, do we even need the Fed?
I think it's important.
Really?
I do. I think that the right people in charge at the Fed level is important. I think having somebody there to be able to, not control the market, but to keep a handle on it. I don't know what would happen if it went away. I'm not sure. I don't know if I want to find out.
Yeah, I'm kind of curious because there's a growing trend on like the social media accounts, and there's more people talking about, hey, let's just abolish the Fed. It only serves to enrich the wealthy at the expense of everybody else. And so I don't know if there's enough there, but it's something worth, I think, keeping an eye on in the coming months and years, because you know what? Just because it's there doesn't mean it has to stay.
I think that it looks like that because usually the Fed trying to help the wealthy is, they're looking at these larger employers because those are who is employing most of America. And so they are trying to help those employers because they want to continue to have success and employment.
Right.
And so how can you keep a handle on, helping out the middle class American? I think the way to do that at the best level is to help the employer of that person.
And this comes back to the root issue. So I don't think it comes down to interest rates. I really don't think it matters about home prices. I think it matters about what a person is able to earn in this economy, like what their income can be for their family. Because if you're making enough money, then you can buy a house. If you're making enough money, then you can afford groceries. But if, like we were talking about, was it somebody in law enforcement and in the medical field, right?
Yeah.
It's a dual income family, and they can't buy a median priced house in their neighborhood,
Right.
Because affordability and interest is the homes are priced too high,
Yeah.
and the interest rates are too high, so they're getting squeezed both ways. So that's my main thing is I'd like to see how we can either reduce prices overall, or more importantly, increase incomes. I think that the income solves everything. If people are making enough money, that solves a lot of these pain points.
Yeah, income can go up. I think the big issue that I would say is just inventory, and the reason why it is during COVID nothing was being built.
Yep.
But people were still having kids, and so population increases, but inventory goes down. That's going to add up to a pretty rough market in the future. Which
I think Jack was a COVID baby.
Yeah,
because he was born in 2021. So
was Clara. Yeah,
that's hilarious. So I forget where I was running with all this. So COVID.
Will the Feds reduce rates?
Will the Fed reduce rate? Yeah, I don't think so. We'll see.
They will. There's a lot of people say they will do it later this year. They're definitely not in July, but
No.
September, December.
What I do think is going to happen is I do think it's going to be a fire year in 2026.
What do you mean by that?
I think there's going to be a lot of people coming to the market that have been sitting on the sidelines, either both buyers and sellers. Like I have an appointment later this week where the homeowner, one's 83, one's 81, and they're like, we can't live here anymore. Like we don't want to let go of our 2% interest rate, but we literally can't live here. There's people in older age brackets. There's people who are going through family issues. There's people who have growing families. There's people who have been putting off relocating for work. And I just think people have stretched that rubber band as tight as they can, and they're going to start.
And they're waiting
moves.
for something. So even just a small movement in interest rates
small
is going to trigger
movement,
them.
Stability, like just feeling like, hey, like this is a good time.
But you know what? there's a good expression. They say, when there's blood in the streets, that's when you want to buy.
Absolutely.
And so I think overall, when you hear about these things that we're talking about, well, I really want rates to drop. Well, I really want more homes to be on the market. Okay, if you do that, you're going to make it a lot harder on yourself. So yes, interest rates are higher right now, but there are great programs that will allow you to go buy a home, 2-1 buy downs. Get a lower rate today. There are ways to do that.
Yeah. You have to have that mentality of taking advantage of the opportunity. Whenever there's a situation, there's always an opportunity.
Yeah, problems
you
are
have to have
opportunities.
that mindset and tap into people like JJ Mack who know how to take advantage of the season and help you sell or buy.
Problems are opportunities. And so if you're experiencing problems in this market, that's an opportunity for you to find a good deal. JJ can help you get a great deal. If you want an interest rate in the, what are we at? If you want an interest rate in the 4s, that's possible with JJ. If you want to find an off-market property, that's possible with the Made for More team. If you want to get in a house with very little, almost no money out of pocket, that is possible in today's market because sellers are willing to give deals, right? Because there's all these great down payment programs for home buyers. There's just so much out there right now. So if you're looking for a great deal, if you want to make a move, if you're looking to get top dollar for your house, man, that's a whole nother conversation. But if you want to get top dollar for your house, go to madeformorerealty.com and we can help.
Realtors who care. I know it's a cheesy phrase, but it's true. You want to work with someone who cares about you, the needs of your family, and who's going to get you the most money for your home in the shortest amount of time. That's who you get with Johnny Jennings and his entire team at Made for More Realty. And listen to this. You can get at least 3 cash offers on your home in as-is condition. You don't have to do repairs or staging or open houses. Just at least 3 cash offers on your home in as-is condition. It's simple, it's easy, it's not complicated. What do you got to lose? If you're curious what kind of offers you would get on your home, just reach out to Johnny Jennings with Made for More Realty. Hey, there's a reason why they have over 1,000 5-star Google reviews. Don't take our word for it. Go check them out for yourself. Johnny Jennings, Made for More Realty, where you get more for your home.
This is Made for More Living with Johnny Jennings. Online at madeformorerealty.com.
Have you seen those Ring camera videos on like Instagram?
Oh, yeah.
Those are some of my favorites because they're just like raw. It's like this is real life. People trying to steal packages, getting electrocuted. People trying to ride their bike and then running into something. But in real estate, man, those Ring cameras, they'll get you. You got to be careful if you're an agent. Make sure you're minding your P's and Q's.
Just always assume that you're always being recorded.
Always being
all
watched.
Times.
That's something I told Valerie though. Before we were even in real estate, when we moved to Kalinga, I was like, Val, just imagine, you're always being watched. You're always being watched.
Where you are.
Live in a small town, you're always being watched. Just make sure you're aware of that. But in today's world, whether you're in a small town or not, you are being watched by those Ring cameras. And JJ, you had a story about somebody who didn't know they were being watched.
Yeah, a realtor told me that they went to go show a house. Long story short, they went in, saw the house. As they were walking out, said, man, we love this house. Let's lowball the bleep out of it. As they were getting filmed by this Ring
recorded on the
camera.
Ring doorbell camera.
And so then did they end up writing the offer?
They wrote the offer, and they did what they were going to say. But the listing agent knew what was going to happen this whole time. And it just made the sellers feel a little bit like they were disrespected. They
Absolutely. Trying to take advantage of them.
Yeah.
It's been on the market a long time. Let's see how low they're willing to go.
Well, they want a good deal, so they want to, exactly. They want to see what's the best deal we can get. So can you blame them? I mean, obviously you want to have those conversations with your agent once you've left the home, at least until you get in the dang car. Holy cow. But that actually shows, how eager they were. But did they finally get the home?
Yeah, you know what happened?
They did not get that house. The seller felt disrespected and said, I don't want to work with these people.
I don't want those people sleeping in my house.
Yeah.
Living.
That is a good point. You got to be careful.
You do have to be careful. I mean, here's the thing is that's that home seller's house. Like, depending on the situation, maybe they built it, maybe they designed it, maybe they may have had kids there, raised kids there. Who knows what life has happened in those 4 walls?
Yeah.
And so you need to be respectful. And what is the phrase? A little bit of honey attracts way more flies than vinegar.
Yeah.
And so if you're like, hey, you know what, I'm really interested in this house, or my client's really interested in this house, but they just can't make this is the best they can do. This is what makes sense for them. That comes across way better than, hey, let's try and take advantage of these people.
Because you've seen many times where a seller accepts an offer that's not the best as far as the highest amount.
Yeah.
But they like their story, or they just connect with that buyer, and sometimes that's more important.
Yep, the story. I mean, unfortunately, because I think I come at it from a numbers, perspective, whereas sometimes the home sellers, they want the numbers, but sometimes they can be swayed out of the numbers into the emotional story. So, but you're right. Sometimes those stories will sell the house, but not if you're like trash talking them in the Ring camera.
Oh man, they should totally post that video.
That would be a good one.
That would be great.
Yeah.
We'll look for that.
See if you can get it. That'd be hilarious.
I'd like to get my hands on that. Yeah.
Yeah. But as far as this brings up a wider discussion is like, what does an offer look like in today's market? So JJ, what are you seeing real briefly on what type of offers are your buyers submitting on properties? Are they coming in above list, below list? Are they getting credits? What are you seeing?
Yeah. I mean, over almost 45% of every single person writing an offer is getting some sort of credit, whether that be for your closing costs, 2-1 rate buy downs, maybe a reduction in purchase price. So an amazing amount of people, and that's going up.
Yeah.
Those numbers were from June. So I can imagine that probably more now.
Yeah, and June was a rough month. Just in general, it was the lowest sales recorded on volume in the last 28 years. And so when you factor in the population growth, when you factor in that includes the Great Recession, the fewest number of homes sold in 28 years in June of 25, that just means sellers are out there willing to cut buyers a deal. And if you're a seller, keep in mind, you're going to have to get flexible terms.
And make sure you're listening with the right person that knows what they're doing.
Yes. Don't go with the friend. Please do not go with the friend. I don't even list my friend's house. Do not go with the friend. The friend is not a good option. Do not go with the cheap option. They're cheap for a reason. Go with the person with a proven track record of success. Thank you so much for being on the show today, JJ. If you guys would like to reach out to him, contact madeformorerealty.com or just Google JJ Mack.